And he was like, no, of course, definitely. Like, I have no ties to that guy. Of course I would, right? And so we put that policy in place. But then 6 weeks later, I get the frantic phone call from the wife. And she said, oh my goodness, my husband wasn't feeling well. And he decided, you know what, I'm going to go to the gym. And I'm going to work out and I'm going to feel better. But while at the gym, he ended up collapsing, suffering a brain aneurysm. Luckily, Stanford was able to save his life, but unfortunately, he had a stroke. He had other things of what had occurred. And now she was reaching out to me because she was like, hey, I remember you said that there were going to be all these living benefits, and is it possible? And to be 100% honest, I was so nervous because they had only held the policy for 6 weeks. I think at that point, maybe paid in maybe $30 to the policy. And I was thinking, oh, shoot, a policy that young, only ever putting in $30. What is Transamerica going to say? And I was like, hey, let's put in claim and let's see what happens. And in that moment is when everything solidified that this business is not just selling financial services. It's bigger than us. It's more than that. It's now how do we help people in all ways of life, in meeting certain specific of needs and things of that nature. So my presentation to you guys today is when this business goes from your head to your heart, everything changes. And with that being said, I'm going to go ahead and share my screen and get into my PowerPoint because, and I was talking with Wilson yesterday, and he was like, hey, PowerPoint now has some, concept of ideas that you could work through. But I know what I know, and I know what I don't know. And thank you, Charlie Prowl, for helping me with my PowerPoint and all my little emojis. But hey, Wilson, next time we'll get it one step up in our presentation. But back to my story. When I submitted that claim over to Transamerica, I am so happy to say within a couple of months of that, I was able to present this award letter. And out of his 10-year term, now think about this, a 10-year term policy, paid in $30 to the policy. I was able to present him an offer from Transamerica for just shy of $260,000, which where or what or how would that have ever happened had it not been for that training appointment, had it not been for me telling him about the new kind of insurance and what benefits could be applicable by taking that policy and converting it. And so even that, after taking that money out, Transamerica, they refigured the premiums, right? Look at his remaining premium amount. His policy went down to a cost of $6.48. And I got to deliver a check, tax-free, to his wife. And the beautiful part, as an accelerated benefit, guess what? There's no receipt. There's no proof of where did you spend the money? What happened with it? Where did it go? She got to do whatever she needed. So she paid down their condo. She stayed home because he was the breadwinner of the family and helped him with his rehabilitation. And they were just a young couple, just getting life started. Just had purchased a condo, just the two of them as a couple. But they didn't have to sell that condo, unfortunately, like the other story. She didn't have to worry financially, unlike that other story. She didn't have to think about what was going to be able to provide, unlike that other story. And so we get to be heroes. We get to actually be heroes to how we can help people. And that's huge, right? I mean, you always opportunity, but within our products and services. So here is an updated picture of that family, and now obviously 2 kids later, and just what a beautiful couple and what they're now being able to accomplish. He's doing well. Obviously, everything is going great for them. And it's so exciting to see, without that financial strain, without that financial burden, what they have been able to achieve, not just for the sake of his recovery, but more importantly, as a family. So I don't know about you guys, but if that doesn't sell you the dream around what we can do, or cause you to pause to really think about this in the bigger picture, or that you too need to have what we sell. Like, here is just some, right, of the policies within my own family. That sake of peace of mind is everything. And you don't have to think that that is something only for clients. You got to start with you and think about what that means. I think COVID has taught us so much. And that peace of mind to know that these policies are intact. God forbid, worst case scenario, something occurs tomorrow, we too can have that same peace of mind, which is tremendous. But when that happens, when you're communicating with people, it's not what you say. It's all about how you make them feel, right? And so in that time of talking to him and his family, what was being identified? What was being identified there was, what was the pain point? Like, what did he have and what didn't he have, right? And by that, how could we solve something to make something better, or to make something different, or to resolve that issue? And if you're not taking the time to make the emotional connection when you're building that rapport, when you're forming with your clients, when you're communicating about who you are and kind of what you do, if you're not unraveling that pain point, that level of dissatisfaction, the ability for you to get to unpeel the onion deep enough, you're not effectively creating any emotion. It's you telling them something about something, and whether or not they're paying attention is completely like where their head is when there's no emotion. So anytime we're communicating with anyone, I love the fact that we can put ourselves in their shoes, treat them as if they're a loved one, but then really ask all the necessary questions on what is the pain and where can we help you resolve what that is. And so what I've prepared for you guys today is some client examples to hopefully maybe give you the ability to see what I'm talking about. So the first individual I want you to meet is Carlos. He's 32 years old, he's in good health, he's a non-smoker. And so in communicating with him, first and foremost, what's the goal? Like, what maybe can we do? What is he really optimizing towards his future? And he was clear in saying he wants to create a savings option for his business, that he owns a barbershop and he wants to retire at 66, but he doesn't want penalties if he needs access to the money before then. So I started asking him, are you familiar with what is available, what your options are? Have you evaluated, thinking of a SEP IRA? Have you evaluated if you're going to add employees, if doing a simple IRA or 401k plan, or have you even evaluated all of the above? And he said, yeah, I actually did look into it. However, there was limitations. There seemed to be administrative cost if I was to add employees, in addition to then not having access, and that's not what I want. And I said, okay, well, that's great that you're familiar with all of the above. Have you ever heard of something indifferent where there would be no limitations, where there would be no penalties, where there would be no administrative costs, where there would be nothing that would having access to your account. And he was like, does that even exist? And I'm like, it does. And if so, would that be something you would want to learn about? Well, what did I do? I clearly connected to all his pain points. So when I asked that question, what do you think his response was? He was like, well, absolutely, I would want to know. So of course we got together. But now with this whole Zoom era, you know, what I've also really looked to configure is how can we make our presentations that much more simple? You know, Eric is always saying, keep it simple, right? But when you present, now when you're presenting through Zoom, how are you keeping your message simple to keep them paying attention, not becoming distracted, keeping their focus, right? Because it's no longer now sitting before each other. How do you retain that? And so what I've investigated is within all of our product lines and services, do you know that they have simplified presentations? So in that, if you're using, you know, the illustration that's 60 plus pages, and then you're now coming in trying to go through one page and then skip pages and then go to another pages, what's happening there? What's happening is people are thinking, what are you skipping? Or if they see the page numbers down at the bottom and it says 7 of 12 or 10 of 20, and you only went through page 10 and 15 and skipped all the rest, you know, people are worried like, okay, so that must be why it's too good to be true. Or that must be the part that they're skipping that I'm supposed to know, but they're not talking about, right? And so what I've done is looked into our product lines to see what illustrations are applicable that we have but are shortened. And so hopefully you guys have seen this one coming out of Nationwide, right? Talking about business solutions and being able to bring these types of benefits that he was looking for in a simplified format, right? So going back to Carlos, well, guess what? In this solution, look what can be, right? You could have no limits as a part of your contribution. We can give you tax-deferred growth potential. More important, you can take income tax-free via loans or withdrawals. Now, what does that mean? That means you have 100% access to your money because it's yours, right? And there's not going to be any of this penalty or restriction, and even better, no IRS. Because everything of what we can access within those two can also give you that money tax-free. And then in addition to that, what we can also put forth is no administrative cost. However, what we're going to also tie in is a benefit to you. And how that will work is it's going to include a portion of what will be in form of life insurance. But Carlos, if I was to ask you, if God forbid something happened to you, if you got injured or you got sick or you needed money for yourself or for your business, if there was a way that that benefit could also become something that you could leverage against and actually take it out in the form of what we call policy loan. Now, not in a traditional sense, but the ability to then leverage the insurance side of money to where then your money doesn't get treated as a withdrawal, and it will continue to compound, and you wouldn't have to worry about losing the compounding effect and interest of crediting in your account because you could then leverage that side of the money. Could that be better and giving you more resources? And he was like, oh my God, you could do that? And I said, yes, not only can you do that, but in addition to that, if you thought about expanding your business, if you thought about you are now coming out of COVID and you're thinking about how to get business back to where it used to be, and let's say you need some assistance and you go into a lender and you start looking into small business accounts or SBA loans or things of that nature, do you realize by having this account, you can also use it as a resource of collateral in assisting you even in that side of lending? So if you were thinking about doing a loan or getting a small business loan or doing something within general of lending, not only can you lend to yourself, but you can also use this powerful product on the other side as an asset to your portfolio and also to your books. So the beautiful part is if you did that, what they do is they put a collateral assignment to your policy in order to then repay themselves for any loan of what you take out. So a lot of people who are looking to get involved in business, as an example, a dentist, right? They can come in, and a lot of times we'll have to get what's called key man policies in order to effectively get loans to get started in business because they don't own the property. They're only buying the book of business as what is the client base. They can then take that key man policy and leverage it as a collateral assignment to the lender in order to obtain that financing. So not only can you have that as something you could do for yourself, but you could also use it in a general sense if you were looking into traditional kind of lending and opportunity there. So this could give you not only an immediate estate, but also that bridge in business if you were to need it. But let's look at it, right? So here's you. If you were able to save, let's say $1,500 a month, and that benefit could even be provided through your business. We can obviously talk to your CPA and make sure we get that cleared with your tax professional. However, a lot of business owners can do executive structure in order to then incentivize putting together a benefit to where the business can help them put money away for their future. So let's look at that. At $18,000 a year, right? Guess what's going to happen? This is the growth based on index of what your account is going to be able to yield. So the beautiful part about that is you're going to see next to here is a guarantee. That guarantee is because we're going to guarantee you a 0% floor. So if markets go down, you never have to worry. But as markets perform, you're going to be able to lock in those gains and you're going to be able to see that happen, right? So obviously a 0% return long term is basically meaning the end of the United States, which I highly doubt that's going to happen. But because it's a guarantee, we are going to illustrate that for you. But let's look at it using a 20-year average, maybe about 6% on how that money can grow. So this is giving you that option. So let's, say in a few years, maybe you need $100,000 towards your business. Well, guess what? You have access to that. Or in future, now look at, you're only 59 years old, but you're cash millionaire, but more importantly, tax-free cash millionaire. So then let's say you keep this policy until you're 66, and now we convert it to income. Look what you're being able to take out. Over $120,000 annually, all the way until 96. Where else could you do something like that? So if we could give you all the benefits of what you're looking for, in addition to access to your money, and then also create a potential income stream of over a six-figure income in retirement, and all the other things that I provided as resources, is there any reason why you wouldn't want to qualify for something like this? He was like, how do you qualify? I said, well, it does take a medical exam. Your decision is not today. That can take anywhere from 2 to 6 weeks, depending on underwriting backlog. But the best thing is we can go ahead and submit that application. You don't have to worry about making that commitment today. I'm not going to ask you for any money. let's just submit an application and let's just work on getting you qualified. Sound good? He was like, yeah, let's do it. So this was the most recent policy that I just delivered for a business owner, which is absolutely amazing. But also, in the end of that, when he said, hey, can you send me that? Because I'd like to show that to my wife or to anyone else. Well, guess what? If you see on the top here, you'll see that this is 3 pages long. So I'm not splicing, I'm not going out of compliance, right? Because when you send anything at the bottom, it usually will say that this is not legitimate of illustration without all pages. Well, I'm including all pages, but guess what? I'm keeping it simple. This is 3 pages. And so when you communicate, guess what? Now you can communicate with people at their level, at their understanding, by continuing a conversation rather than getting too technical. So this was so cool to set up for him. He's so excited. And we just started this policy last month. Here's another client example. Let's meet Christina, right? So the same concept, you guys. In speaking with her, what's the pain point? Or what is it that she has as a goal? What is she thinking? And in her thoughts, she was thinking, well, I'm 51 years old. Maybe I should start maxing out my 401k. How many of us have met clients that are like, I'm going to just max this thing out? Okay, well, you could do that, right? But why don't we look at that? Have you ever evaluated that? Have you ever painted the picture, even just in a generic of calculator, to even see what that would become? And of course, how many people haven't, right? And so there's been a resource that you could also optimize, which most people overlook, called the tax-free bucket. And has that ever been something you have heard of? And she was like, no, I didn't know anything. I mean, maybe a Roth, but not really. And I said, well, these assets are what is typically overlooked. So yes, there could be a Roth, but there's also things that can happen within municipalities, but in addition to life insurance, which will allow you to generally be able to access money tax-free. So I know you're thinking about maxing out your 401k. However, have you ever evaluated that against thinking about future of tax, what limitations you may have until 59 and a half, or even at 72, when now you go into a required minimum distribution phase? And she was like, no, not really. And I said, so if I could show you not only what maybe that 401k could look like, but also possibly show you an alternative that you may have overlooked, is there any reason why you wouldn't want to learn more about that? And she was like, no, of course I would. So we set up the appointment and moved forward with that. So what did I do? I generated the money chip, right? We've had training on this, which is completely amazing to paint that picture of what that can mean by somebody maxing out their 401k, right? So if she was maxing out at $26,000 for the next 10 years, I gave her an average rate of return of 5%, because if you look at a lot of historic, what is the historic? Between 4 and 6. So I put her right in the middle at 5, and I said, okay, here's what you could accumulate during that phase. And then now, how long do you want to live on that money? And she said, well, hopefully 35 years. And I said, okay, well then now let's look at it on the back end. So if we take this money and now let's continue to give you, as if the market is going to continually give you 5% rate of return year over year over year. Like it's never going to crash, like it never would go down, like you would optimize 5%. Is that going to be the case? Maybe, maybe not, but let's just paint the picture if so. And then let's keep you in a lower tax bracket. Let's just say 35%, 22% Fed, 15, here's your taxes, here's your net. So what are you keeping? You're keeping just shy of $13,000 annually. And so if you were to see that, is that going to be enough? One. But on the flip side, let's also look at what that meant in taxes. Because do you believe taxes are going to be less in the future or more? What did you think she said? She was like, obviously, probably more. And I said, okay, well, let's keep you at 35%, but show you what that can look like. So if we take that 35% based on your $26,000, what you're not paying in taxes today is $9,100 times 10 for the 10 years. What you didn't pay in tax while saving is $91,000. But now let's take the flip side. You want to live on this money for 35 years. Based on the taxes, what you'll pay in the future, if taxes stay at 35%, is over $244,000. So Christina, if you had an opportunity to pay $91,000 or $244,000, which one sounds better? And she was like, well, the 91, obviously. And I said, exactly, because it's not a matter of how much you save, it's a matter of how much you keep. So let me show you the tax savings. One versus the other is just over $153,000. Now, Christina, if I could put that $153,000 back on your side of the table to where you could actually enjoy that income, is that better? And she was like, well, of course. And I said, okay, let me show you how that would work, right? What I'm going to introduce you to is to that overlooked bucket on how that works and why this is better. So it's going to be introducing you to an insurance solution, but look at the key benefits that it's going to give you. It's going to give you tax-deferred accumulation, tax-free distribution, income tax-free if you were to pass, as well as no penalty for early withdrawal or penalty at 72 because there's no more RMD of mandatory requirement. So here we can give you 4 benefits. In your 401k, under a qualified plan, you have only 2 benefits of that tax-deductible contribution, which we just realized isn't saving you anything, in addition to only the tax-deferred accumulation, and that's only if markets perform. So do you like 2 benefits, or do you like 4 benefits? She's like, obviously 4. Well, now let's paint that same picture. So here's $26,000 for 10 years. You put in the same $260, but now look what you get to take out. Not only can you potentially take out $16,000 in tax-free income rather than taxable income, for the same 35 years, your total distribution becomes $583,000, almost $584,000. So where I was showing you that excess of that 150, now you can use for you rather than the IRS. So now that you are thinking about whether to max out your 401k or seeing this as an alternative, which one looks better? She was like, well, obviously this one looks better. And I said, okay, well then this is the catch. So the catch is that you have to qualify for this. And because we're going to give you an immediate benefit within this plan, also what's going to happen is you'll get a free physical. So there's no health issue. We don't have anything minor or major medically going on, any medications. She was like, no, I'm good. I'm like, okay, then why don't we just see if you can qualify? She was like, okay, what do we need to do? So even this with Pacific Life, guess what you guys see at the bottom where it says 7 of 12? Under the 7 to 12 pages is showing her comparing all these different vehicles, one versus the other, on why the life insurance policy is going to be so much more advantageous with all the characteristics and details of what I just showed her. So when she says, hey, can you send me something? I'm going to be able to send her these 12 pages and stay in compliance, right? So this was another recent person. Hey, let's now meet Nancy. She's 60 years old. She's got 100,000 saved. And what's her goal? She's like, crap, I barely have any money and I don't want to lose it. Or, goodness, run out, right? And how many clients do we meet all the time that are behind the curve or feel like they don't have enough, right? And so I asked her, I said, where's the money now? What is it doing? How's it growing? Who's managing it, if it's being managed? And all of the above. And I said, well, look, if you have this and your major concern is you don't want to lose money and you don't want to run out, if I could solve those two problems, is there any reason why you wouldn't want to look at something as comparable? And she was like, oh, no, of course, right? So, of course, what did I do? I brought in agility. If you guys don't have and presenting this to your clients, man, are you missing out? Because this account is absolutely amazing for what we can do in helping people in that regard. So I told her, I said, hey, what I'm going to do is I'm going to give you the most recent 10 years. So if you were a client of mine and you had this account for the last 10 years, what you would have experienced based on the interest rates that were performing over the last 10. So let's look at it. What we're going to do is we're going to move that 100,000 and we're going to secure it. So you're not going to be at jeopardy of loss or risk. And then we're going to use your 10-year bandwidth and then be able to show you how you'll be able to obtain income. But in that phase, if markets are doing well, we're also going to give you raises in retirement. So here's how that can potentially work for you. At 70, when you turn income on, it'll be around $14,395. But then what you'll see is that it has the ability to go up. So 14 to 16 to 18 to 20 to 23. Now, look at this. At 82, 83, you'll see your income, which is a guaranteed lifetime income withdrawal, is still going up. But what's happening to the right side? You're going to see these zeros. Nancy, do you know what these zeros mean? And she was like, no, what does it mean? And I said, it means you're out of money. But not in what the concept I'm presenting. In meaning if you were to leave your money where it's at, and it was earning the same rate of return, and you were taking out all these withdrawals year over year, with those increases, you would have depleted your accumulative value in that account. However, in this, because you get this guarantee of income for life, not only do you get to continue to receive that income, you also still have the potential to get raises in retirement. So rather than worrying at 82 or 81 years old, oh my gosh, am I going to be out of money? What you can do is still be enjoying retirement and knowing that a check is going to continue to come year over year. So what I did is I made an illustration good through 94, 95. Obviously, if you live longer, then it's going to be there for you. But here's the value now in your 90s. Look where your income is. Your income spiked to over $50,000, $60,000 now in your 90s that you're getting annually. So you put in $100,000, but were able to withdraw $788,000. So if you could take out 7 times the amount of what you put in, not have to worry about running out, not having to worry about it depleting or not having enough, right? Is this something you would want to see how you could qualify? And she was like, you have to qualify? I said, yes. We have to first understand if that money is even eligible based on where it's currently being held and whether or not you could qualify for this account. but if we can configure to understand if you could qualify for this, is there any reason why you wouldn't want to take advantage of this? She was like, no, this sounds great. And I said, here's one more additive, Nancy. This account has no fees. And if we can get you qualified, they're going to give you a 25% bonus on moving that money in. So where in the beginning where it says your benefit is now $125,000, because day one they'll also put in that extra $25,000. Now this may be only available for this month, so how fast can we make the phone call to see if this money is eligible? She's like, can we do it now? When can we do it? So of course this was something we just helped Nancy with, right? These accounts are awesome. Now, of course, if Nancy asks me for the illustration, I send her all 22 pages because unfortunately Athene doesn't have that simplified version. But in it, I explain what she'll see. I tell her, you're going to see the guarantee of that zero because you're never going to be subject to risk of loss, in addition to the portion of what I just explained. So when you review it, you'll see both sides. And they're perfectly fine because why? You explained it and now they know what they're seeing, right? Let's move a little quicker and go into a situation with Kelly and Jeff. They want to retire together in the next 5 years. And both of them have $450,000 in their 401ks. And when they retire in the next 5 years, Kelly said her main goal was that they had at least $80,000 per year, if not better, but their minimum would be $80,000. And I said, so what are more of the concern around getting that $80,000? And she said, well, my bigger concern is not so much the markets, but I'm thinking about the raise of tax or an increase of inflation and what that can mean. And I said, okay, if we could do something to where not only we could give you the $80,000, but then give you the potential in future, maybe after 5 years, to where we can show you how you can get raises in retirement. You wouldn't have to worry about losing the money. We could eliminate downside risk of market, and we could give you permanent income to where you would never run out. Is that something you would want to explore? They were like, well, yeah. How does that work? Right? And so I did the same thing with agility. And the beautiful part is what's called free withdrawals, right? Even though agility, we can't start that same income benefit for life for 10, but it doesn't mean we can't create income for our clients before 10. So we always have the ability to optimize as a strategy of what can come out through those free withdrawals to give the clients the timelines they're looking for. So of course, this is starting out with her husband, showing her how they'll get the $40,000 from his account, and then at 10, we'll be able to convert that into a lifetime income stream. So what you will also see is that, what you also see is when that income begins, when I created the illustration, I created it to show them a raise. So then going from $40,000 after 5 years would hypothetically also give them a raise based on the interest that they could earn. And then repeating that so they can see how they wouldn't have to worry about future of tax or inflation, so they have that protection as well. So they went from $40,000 to $46,000 to $52,000 and so on. I did the same thing, showing them, hey, at 84, 85, do you want to be out of money by seeing how you took over $1 million out of the account, which now depleted it in an accumulative fashion, or continue to receive income and multiply that? So by the time you two were 94, 95 years old, you took out over $2.3 million. Now this is just Jeff's side of the account. Now let's look at it using Kelly's in addition, right? So that 40 from her, 40 for you, gets that 80,000 combined. Both of you start retirement together. But at 10, when we turn that extra feature on, now you have that potential for increases in retirement. So not only did you take $1 million out of your account, she took $1 million out of her account, but because she's also a little younger, guess what? At 94, 95, you've taken out
your business
$3
still hybrid?
million from the account. So combined, you took $5 million plus from this account, and you only invested 900, right? Now, if God forbid something unfortunate happens, let's go back to Jeff. Unfortunately, he passes away and he's 73, 74 years old. Guess what's going to happen, Kelly? They're going to give you two options. You, as the beneficiary of his account, they're going to see here on this column where it says death benefit. This will become an immediate benefit that you could receive from day one, that if you wanted it in the form of lump sum, that would go to you. So that could be $485,000 to $488,000 that they would give you. Now, there's no probate because this is coming through an insurance company. We get to eliminate any probate if you didn't have a trust already in place. But this is where you can take that sum, or if you see the column under what's called benefit base, the value in that account is $732 to $749. You can also take that amount. What happens is they'll pay you over 5 years. So if you want lump sum immediate, you can take that 485, 488, or if you're comfortable, you could take over 5 years, that's 732 to 749. So they give you the benefit of either one. God forbid if anything untimely was to occur, that you could choose which one you would want. Now again, this account is free and there's no fees. And so if this could be something your money could qualify for, is there any reason why you wouldn't want to take advantage of this? And have that surety, that peace of mind, to when you go into retirement, not only would you have the $80,000 you wanted to start with, but more importantly, to fix the problem that could present in future for taxes or inflation. She was like, no, how do we figure that out, right? And so tomorrow we're making those, well, not tomorrow, but Monday we're going to make those phone calls and seeing if their money is eligible and creating this account for them. So this is a wonderful vehicle. You know, think about stacking the benefits towards your clients. You know, no fees, 25% bonus, the ability to get raises in retirement. Structure it to where if they needed it before the 10, that you could still use this as a resource. The best part about our whole platform is that everything we can offer is so unlimited between all the carriers that we offer. It's crazy, right? So, couple more. Here's Beatrice. She's 70 years old. She's in good health. She doesn't smoke. But here's Beatrice's goal. Because in speaking with her, she's like, I feel like I'm self-insured. I don't want insurance and I don't want an annuity. How many of us have come across clients like that? And if you haven't, you will. So what are the real 3 keys that we can solve, right? We take the basic of human of need, thinking about, you know, God forbid you get sick, God forbid you pass away, or the hope and dream that you're going to live long and healthy and you'll have a wonderful retirement. So I asked her, I said, okay, if you feel yourself insured and you feel like you don't need to worry about income, then what do you have in place to take some of the burden off your shoulders if you were to get sick? Because have you ever evaluated long-term care? Have you ever looked into the cost of? Have you thought about what gap may present if you were to want to go into a quality of either facility or have in-home of care, what you would want for the sake of your lifestyle and quality thereof that would be in place that would support, God forbid that happen. Because they say, right, 1 out of 4 will need some form of long-term care because of modern day of technology of medicine. We're living longer, but hey, the body is still aging. So do you have anything in place for that? And she was like, no, I don't. And I said, all right, so do you want to deplete other assets or use your retirement money or be trying to do a reverse mortgage or some other to try to get money in support? Or do you also feel you have enough to support what that might mean if you were to need long-term care and to pay the cost up? And she said, well, if I looked into it, I think that my cost is probably going to be maybe $3,000-4,000 more than what I would currently feel I would have in income. And I said, okay, if there was a way we could take a very minimal portion of your 401k and pay for a long-term care policy that would also give you that unlimited potential of benefit. So God forbid if that happened in aging, that you could see how we can resolve that gap. And it really didn't affect your long-term outlook for future, for income, and what you think you already have in place. We used just a small portion of that. Is that something you would be open to reviewing? And she was like, well, yeah, what is that? So, what did I bring to the table? I brought this long-term care benefit because, like I said, our platform is awesome. And we have all the bells and whistles. So here it is. So I said, okay, what we're going to do is we're only going to take $100,000 from your 401k, and we're going to put it into this solution. Now, what it will do is it will also give you an immediate benefit if, God forbid, you pass, that we're going to give you $137,000 plus back. So it's not like a standalone, use it or lose it. God forbid you don't use this in a long-term care situation, we're still going to be able to give that money to someone you love. So it's not use it or lose it. But here's the best part. What will happen is that money being of qualified funds, what they're going to do is over a 20-year period is they're going to take that money and they're going to use it to pay for this policy. Now, what else is going to also happen is it's going to comply for your R&D requirement. So when you're 72, you're not going to need to worry about being penalized because this was qualified money that you didn't take an RMD of portion and pay that or to gain that for yourself to not be penalized at 50%. So we'll be able to kill 2 birds with 1 stone by using that money, which will also make that payment, which will also comply for RMD. Now, what it's going to do is it's going to give you $5,483 monthly. So not only if you were to pull that out over the next 25 months in a situation of need of long-term care, what you would have pulled out for yourself is the same $137,000. But it gets better. What happens if you don't recover, but you're still living? Guess what? There's a benefit we can also create with a continuation of unlimited long-term care benefit. And if you were to go in that phase of the policy, it's going to continue to pay you $5,596 as an unlimited support through however long you live. So think about it. In 25 months, not only did you get all your money back plus some, not only did it comply for your RMD requirement, not only did we just use something very minimal out of your portfolio, but this could give you all the potential to bridging that gap in your future, and you wouldn't need to worry about long-term care or the cost of, so we can close that gap. If there was any reason that we could create something like this, is there any reason that you wouldn't want to qualify? And she was like, what do I have to do to qualify? I said, it's a simple phone call. Hopefully just based on that phone call is all that's needed, and we can always get kind of an instant approval. So why don't we just start there? And so we're making the phone call, right? To move that little 100,000 over, but resolve that problem for her, which is awesome, right? Let me go into a different point now. So with all those client examples and everything of what I've talked about, if this business was something that we could achieve in a sprint, all of us would be million-dollar earners. Eric would have had his vision resolved, right? But it's not a sprint. It's a journey. And what can you do to enjoy that? I mean, obviously doing all those wonderful benefits and resolving those problems and getting paid to do what I just described is amazing enough. But, you know, when we're grinding it out, when we're making the calls, when we're trying to add teammates and then things are not moving the way that we would want them to move as quick as we would want them to move, you know, what do you do in those moments to keep yourself energized and enjoying this journey and, you know, understanding that everything is not your timing, but God's timing. But you still got to figure out a way to create some sense of joy. So getting up in the morning and making those calls or doing the things that we need to do is something that you would find enthusiastic energy towards, right? And so here's what I call it. I call it selling the dream to myself. Because again, God can do something great in this platform because it's unlimited. When you work in a job, He can't make God-sized dreams come true there. Because why? Because you're in a limited space. You're in a limited capacity. He doesn't have the resource to do blessings beyond your measure in something that you're not in an unlimited platform for Him to work in. So the beautiful part is that's what this platform does. This platform gives us the ability to see those God-sized dreams come to manifestation in addition to what's important to you, right? I remember getting started in this business. I'm a little more seasoned. I'm a little more older, right? And it's not just all about the money. Although the money is great, but time is also very sacred at this space. You know, there's two things in life that some of us get to appreciate, and that's called a redo, right? If we're blessed enough, if we did something one way once, and then we gain opportunity to do it different another time, then we obviously have that ability to take advantage of that blessing. Because a lot of people in life don't get that second chance. They don't get that redo. And so how I've thought about that in my career, when I was doing my interview, I so remember there was this $50,000 in 1 month plaque on the wall, and I was thinking, wow, I mean, if you could do that in 2 months and the 6-figure income in 2 months, then you could take the rest of the year off, how cool would that be, right? So guess what? Came in and eventually knocked that out, right? Now I have that plaque for myself. But more importantly, it's also been able to make that happen for others. Watching my teammates succeed. These are 2 marketing directors in my organization today. It's awesome to be able to give them these money plaques and rewarding them and showing them how they too can benefit and building that passion and being a part of this organization. Another big part is doing dream trips. My husband and I prioritize that. We're Disney fanatics when it comes to every 5th year for our kids' birthdays, doing something Disney. And then when they turn 20, we do, the go big or go home moment. And our son was turning 20 in last year. And guess what happened? COVID, right? But luckily, things started to get better. Things started to resolve. And Disney sent out an email saying, hey, we're opening to a 30% capacity. We believe that there's the ability for those who visit during that time that you could stay safe. And so we took advantage of that. Here's our picture with all of our masks, down in Disney in Florida. We love Florida. Thank you for hosting us there. And still was able to fulfill that tradition and taking advantage of that. We've also been going down to Cabo for 17, 18 years, and they too sent us a notice saying, hey, come isolate with us, put us in a private villa, 3,000 square foot, 2 stories. So that's our kids jumping into our own infinity pool while visiting there. So at the end of the year, we were able to make some good stuff happen. We were able to feel like we were living again, that there was a sake of normalcy, even though things are real, although, we got to keep going, right? But here's my little pride and joy. And as I mentioned, there's the such thing of your time and God's time. And although it wasn't necessarily what I was hoping in my time, but here he is. He's my little buddy. Oh my goodness. I so love this little guy. It's within and without words of how to describe what this is for me in this point in my life. This is my redo. And when I was working in my career, I felt like I, as a mom, had to make some sacrifices, to commuting, showing up in the cubicle every day, climbing that corporate ladder, and, wasn't always able to have the ability to be the mom that I would want to be because financially we needed those 2 incomes and putting that together. And it was always a prayer to think that if I was blessed for the sake of quality of life, and by the time I got to a position to be a grandma, that I could have that ability to be the person that I wanted to be with my own, that I could recreate within my grandchildren. I remember the joy and the sense of security and peace that it gave me to be able to take my kids to my mother-in-law when they were young. And so when my daughter went back to work, because she doesn't have the ability to work from home, I've gotten the opportunity to be that person. And we play every day. And it's amazing because I've now gotten to be with him from the day he was born, and now he's about 19 months old, and we are obviously playing in the backyard and having a good time back there. But this little kid means the world to me, and there's no sense of money that could replace that time. And so I've gotten to take advantage of that based on where I'm at and the position here within this company that gives us the choice of time or money or both. But here's his policy, right? We don't just talk about this stuff or provide this for others. When that little guy was born, as soon as we got his social, we put his policy together. And guess what? We have a product, right? God forbid, if anything unfortunately happens to him too soon, obviously with the desire and hope that he's going to have a wonderful future. So we want to make sure he's that tax-free cash $1 million baby. But then guess what too? What happens if he became injured or sick or something happened? Right? We want those same benefits for our infants and for our juvenile policies and for our kids. And so here's what we were able to create for him And the best part about all of this, in addition to all of the above, is now we get to change our legacy, right? Have you ever thought about, man, if my family had a policy like this for me when I was young, what difference financially that could have meant for me and all of the above, right? And so we want to make sure that we do that for our kids. Not only do my children have similar policy, but my grandchildren, right? And in this policy as well, they have an extra benefit that gives them lifetime income benefit rider. Let me say that again. In an IUL, lifetime income benefit rider, right? Because isn't it biblically that we're going to live until 120? Well, I want to position that for my grandson, and I don't want him to be worried about money. So not only will he have that money, not only will he be able to access it tax-free, but as a free benefit with no extra fees, we can also have him have that as an income lifetime till age 120. Awesome stuff, right? So we're so excited to have started this for him and creating a resource that we as grandparents were able to begin, but obviously we'll be able to maximize towards his future. Maybe just not settle for that 1 million. Let's go beyond that. And it was all because of this business. It was all because of this platform that introduced me, that gave me a world-class financial education that I could then create something so indifferent, not only for my husband and I, but for our kids and now our grandkids, which is so amazing, right? Like Stacy said, man, being a part of Eric and Sandra's run, you know, this meant everything. And as you can see, even within my own family, it means something, but so does my leadership. They have done more in what my husband and I could have ever imagined in their gratitude, in their belief, in their sacrifice, in their just giving for benefits and trips and things of incentive that they've created. But more importantly, I was reflecting over these last 15 months. And over these last 15 months, the vision and the immediate pivot and shift Eric, Sandra, and this team that they have created overnight to transform Pinnacle to really help the mental health of everyone involved. I have talked to people within corporate nursing, and what they were being told is it was the apocalypse. Be prepared, but don't tell your family or your friends that this is what's going to happen, right? And although Eric came in and he said, hey, this is real, and we're going to do everything to keep ourselves safe, but guess what? We're not going to succumb to the belief that this is the end. We're going to retain the focus that we can survive this, that we can build hope, that we can still have a focus, a future, and generations of what will be able to be supported through this organization. And it's going to start with Pinnacle TV. And before 9 o'clock, you're going to get up, you're going to work out, and then you're going to log in. Don't pay attention to the disbelief. Stay focused on the belief and moving this ship forward, and stay connected. And he put forth, I think it was like 120 days, nonstop, every day, giving us the best of the best, feeding us, giving us that energy and environment to know that this wasn't going to take us all out, that this was going to help us in our future, and that we could still provide hope and light in a dark world. So when they said they were going to run, it was not a question. of whether to participate. It was just a question of what level could I participate on. And what I know is I always have control of my pen. What I know is I always have control of me. I was also having to have a surgery in April, which was going to take 7-8 weeks to recover from. But I wasn't going to allow that to defeat me from being a part of something so meaningful, to be a part of their final run, watching them hit the pinnacle of the title that you can hold in position in all of WFG. I am beyond fired up to be able to wear one of these jackets for the remainder of my career, and seeing that happen, being a part of that journey, as a resource of gratitude towards everything that you do every single day in support of this organization. If that little 36,000 points could have helped make that difference, I was going to help be that person in coming through for this team. And so I'm so excited to make that happen. But in final, we're also not giving up. We're committed to the bigger vision. We're committed to the $1 million. We're committed to being one of the 1,000 that will come through this organization. We love you, Eric and Sandra. We love this team. We love all the champions and the examples and the everyday of what is given back to us. I appreciate Veronica Jaime letting me get an opportunity to try that ring on, but that day will come. I'm claiming it. I'm receiving it. I'm blessed by it, because this organization is not going to allow anything less because of our leadership, and I couldn't be more blessed because of it. Thank you guys so much for allowing me the opportunity to hopefully share some value, some resource as to how you can help more people, but ultimately take advantage of this time, take advantage of this opportunity. Because why? Because nobody has it better than us. All right, you guys, have a great day. Enjoy Father's Day, and I'll look forward to hopefully doing this and getting an opportunity to see you guys in future again soon. Bye-bye.